Hey, my name is James Nicholson. Welcome to my YouTube channel. The Bank of England's just had their meeting, their monetary policy meeting that they have every 6 weeks. What's happened in today's meeting? Did rates go up? Did they go down? More importantly, is actually what happened since that meeting. It's only been a few hours since the meeting actually finished. And we need to talk about what happened in the USA with their central bank, the Federal Reserve meeting yesterday. We're going to talk about all of that and more. This is going to have a big impact on house prices and the cost of your mortgage. So make sure while you're here, if you haven't done before, make sure you smash that subscribe button and hit the bell notification. Go and do it right now. We've just got 18,000 subscribers. Thank you to everyone that subscribes already. And let's make sure as many people know about this content by smashing the like button, tickling the like button. Do something to the like button over there. That really helps us with the YouTube algorithm. So do that right now. So what's going on? Well, inflation. That's what's been going on. And that's all they really talk about at the Bank of England meetings for the last couple of years. And inflation obviously went crazy. It peaked at 11 odd %. And since then, the fight has been on to bring that down all around the world, basically. So first off, let's talk about America. So in the USA yesterday, the Federal Reserve had their meeting. And in their meeting, they were really pretty optimistic about the fact that interest rates are going to start coming down. And they indicated that in 2024 in the USA, you might see as many as 3 interest rate drops. Now, the markets in America actually feel that there's going to be 5 drops during 2024 in the USA on their interest rates. Now, why does that mean anything to us? Well, we often follow the Fed. And so you're going to see that there's a bit of a disagreement on that, but we actually do normally follow the Fed. And that's important that we do that because that keeps our currencies fairly aligned. And if we don't, and we actually drop before them, then the value of the pound would drop. That means that as we import a lot of stuff here, inflation could spike up again off the back of that. So it was interesting that the Federal Reserve meeting, I watched that last night, and they're talking about the fact that they feel that they've tightened enough. In fact, in America, they're saying they may have over-tightened, and they were saying, what the journalists that were asking questions to the Federal Reserve there were saying, do we need to wait until we get to 2% in order to drop interest rates? And they said, actually, we don't, because if we wait until we get 2% inflation, we might have already over-tightened because there's such a lag when you actually increase the rates for it to have an impact. There's such a lag. And so they're talking in America about already dropping interest rates, which is very, very good for us. Now, what happened in the UK? They're not talking about that at all. In fact, the language that people are saying is that they're very hawkish, which means militant. And they're saying that, look, inflation might not be gone. It could spike up again at any point. However, the Bank of England is under a lot of criticism for not putting interest rates up earlier and not dealing with inflation as well as other countries have done. So they're not going to come out and say, look, rates are going down in February, because we still have higher inflation than a lot of countries at the moment. I think next week's data is expected to drop below 4%. But until that data's out, we don't know for certain. There could be some surprises in that data. So rates have been kept on hold at 5.25%, which is where it's been now for 3 consecutive meetings. We had 14 interest rate rises that we started in 21, and it's been held now for the last 3 meetings. So that's really, really positive. Now, this is interesting. So they have a vote. There's 9 members of the monetary policy, and that means that we have an odd number, so we always get a result. And 6 of them voted to keep interest rates as they are, so flat. And 3 of them, though, just wanted to increase interest rates, which was interesting. Now, on average, they were saying that they wanted to increase it by 0.25% to 5.5%. But last few meetings, it hasn't been that many people that wanted to increase that. The reason for that is they just want to finally get this inflation behind us. But it isn't looking great, the economy now. We've had some difficult results in October. The economy is shrinking slightly. So they've got to balance this. They don't want to go into recession as well. Now, one of the bigger problems that they believe in the UK that we've got is wage inflation. And so wage inflation sits at 7.3%. So ridiculous, isn't it? Like, people have been hit, particularly the poorer people have been hit really hard for the last few years. And having some wage inflation right now, maybe if it's even only on a temporary basis, allows them to actually catch up with all that difficult time that they've had. Food and some products went up 30%. So the fact that the inflation is around 4.6, the wage inflation is around 7.3, that does allow people to feel slightly better off each month as time goes on. And so the Bank of England, though, they don't want this wage inflation because what will happen is people will then spend more money. That then could fuel a second bout of inflation. So that's the main thing that they're concerned about at the moment, is wage inflation. So here's what the markets are already pricing in. So the markets are saying that by the end of next year, that the interest rate at the Bank of England will be just 4%. Now, they'll probably go down in small increments, 0.25% each time. So that means we might have quite a few drops, 5 drops potentially, similar to what the market's expecting in America. That would be really good because this starts moving us in the right direction. If wages still rise a little bit above inflation, people are going to get some affordability there. If mortgage interest rates come down, that's going to take pain off for those refinancing and remortgaging and buying new homes in 2024. So that's pretty good. Hopefully the market is right, and often they are, because they've got billions of pounds riding on this, and they've got clever algorithms that work all this stuff out. So what's also happened as well is mortgage rates have already dropped, and so there's I'll do some more videos on this, but I'll give you some lenders that you can go and check out today. They've already dropped interest rates based off the fact that they knew that this was going to be a hold, and so 2 big lenders have done it today. That's Virgin and HSBC. So do go and check out their rates. Comment below, let me know what you find. And the one that's going to do it tomorrow, they've already said they're just working out what their rate's going to be, is TSB. So that's good positive news there, that we're still getting some lower rates. Banks are getting more competitive. They want to get some more business in. And a lot of this is based off swap rates. And swap rates are better now. They're looking that a lot of people believe that all of the central governments, all the central banks even, are going to drop rates in 2024. And that's moving the rates that we get. That's more important. The rate that we get is more important than this rate. And they're moving down. So you're going to see, very likely, some rates close to 4% very, very soon. You might see that today or tomorrow. If not, when we start seeing these rates come down, if they're going down to 4%, means possibly 5 drops in interest rates in 2024. If we see that movement down, then banks will get even more competitive. They'll be more comfortable to lend at a better rate. So all in all, this is good, positive news. I think the better news is what's come across from America yesterday, where they're saying, they're using the language saying they are going to be cutting interest rates soon. That is very positive from what we're seeing in America. And as we've said on this channel, and it's a common theme, is we follow the Fed. The Bank of England follow the Fed. The Fed will be the first to cut interest rates. I'm sure of that. We will then follow them. Maybe not the same month. It might be the month after, but you can be sure that we will follow them to whatever rate they end up. Interesting day today. What do you think about it? Do comment below. Do smash the like button. Make sure you subscribe, guys. Let's get to 19,000 subscribers now. And make sure you check out all the other content on my channel. Maybe start with this video right here.